What a weekend. We have banks collapsing, inflation worries still hanging around, a federal rate hike looming, and a week full of economic data ahead of us. Welcome inside the $1 million closet. My name is SpyFi, and this is SpyFi Trades. I hate wasting time, so let's get into it. Thursday and Friday, we saw Silicon Valley Bank, SVB, go through a bank run when the customers started to hear rumors floating around online of the bank's insolvency. Well, by Saturday morning, the news of SVB had hit the mainstream media, and people began lining up to take out their money. Saturday also brought us news of Signature Bank also collapsing, forcing the Fed's Janet Yellen to come out with a statement first saying there won't be a bailout, and I quote, "We're not going to do that again," she said to news reporters earlier this afternoon, minutes before announcing that the government will backstop depositors with a $25 billion bond to keep business as usual. So apparently the 16th and the 24th largest banks in America are too big to fail now. Pretty much, if you have bank in your name, the American government will do anything in its power to try and help you out. Okay, let's take a look at some charts. VIX went absolutely parabolic last week, gaining as much as $10 over Thursday and Friday trading hours, showing that market makers knew going into next week would be crazy. This week will be mostly driven by economic data releases, as first up is the CPI print on Tuesday morning before opening bell. Last month, we saw a 6.4% year-over-year increase, and this time estimates have it at 6.1%. But be very careful if this comes in even just a touch under estimates. The powder keg, which is the market currently, could see its fuse lit if released data just keeps going negative. Although writing has been on the wall the whole time, the Feds have done a marvelous job convincing people that markets and the financial system as a whole is stable. Nothing to see here. Everything's fine. All right, on to the SPY. With banks getting federal support and backing this weekend, we could see a small uptick creating higher lows around that 390 to 391 resistance. The downside looks a lot more appetizing though. The next fib in line is the 23.6% retracement at 379.40, which could see it tested Monday if reactions to the bank issues are looked at negatively. Over to the 30-minute chart, we see the same 23.6% retracement at the 384 mark, confirming a move to 384 could see a slide to through 379 quickly, if not later in the week. I'm not expecting new 52-week lows this week, but with the FOMC meeting just around the corner, we could see some capitulation into those lower strikes that could gain a lot of momentum if we see a 0.75% rate hike come the March 22nd meeting. Our quant team says there still would have to be some massive economic news to change the course at this time, but the 0.7% rate hike is still on the table, but only coming in with an 11% chance according to the Bloomberg stats. But if we know Jay Powell and his uncanny ability to do exactly what he said he wouldn't do, my estimates have it at 50-50 at this point. Okay, on to the Qs. I can't imagine this week will be any good for the tech sector as the SVB situation hits home as the Nasdaq is the technology index for the market, and SVB was the tech sector's bank. We could see some early signs of green with good news of federal help, but this still doesn't ease the fears from everyone worried about losing their life savings or not being able to pay your business's payroll. Sure, your money is insured up to $250K, but your company's payroll is probably larger than that, and sadly, you can't pay your bills with FDIC IOUs. At least not yet. 290 to 291 could be seen with some positive sentiment, but I don't think it'll last as the bears should look to pounce while the bulls are stunned. If 287.50 isn't passed in pre-market, look to that to play a role of support. If not, 285 will prove to be a battling ground, historically holding both support and resistance levels. Ah, shit. Hello? Hey, Elon. How you doing, bud? You know I'm busy shooting the video. You just called me 20 minutes ago asking if you can be on it. I said no. I don't care that you own spaceships. This is my thing here. Daddy didn't give me $1 million to buy an idea from someone. Whoa. I'm sorry, man. Don't cry. Of course we're still on for Wings Wednesday. I just hate it when you throw around that billionaire card, man. All right. But remember, you still owe me $25 for that taxi ride. All right, later, bud. That Elon wants on my videos so bad. Anyways, folks, this week is going to be a doozy with all the major economic data being released. Remember, CPI comes out Tuesday before opening bell. Wednesday, we see PPI and retail sales before opening bell, while crude oil inventories hits at 10:30 a.m. Then to finish, Thursday gives us February's building permits and the jobless claims print. That's all I have for you today, agents. Please, if you found my video informative or at least entertaining, hit that like and subscribe to the channel and stay up to date on all my videos. If you're new to trading options or just feel that you want to take your derivatives trading to the next level, I have a video course coming out this summer called the Classified Papers. This is a 3-level program from beginners to advanced, teaching you everything from what's an options contract to options probability curves. Inside, you'll learn about the Greeks. I'll explain different chart overlays and indicators, but more importantly, when and how to use them properly. The Classified Papers, a SpyFi guide to options trading, coming summer 2023. And a special thanks to Austin398 on my Discord for encouraging me and kicking me in the ass to create an options trading guide. Appreciate you, brother. Thank you again, agents. I'll see you in the trenches.